Yeah, hi everyone. I'm Janelle Riley. I know many of you that are attending the webinar today, so welcome and nice to talk to you again. We do this webinar annually. We cover basically the same topics every year because, I mean, year-end closing procedures for GP have been relatively the same other than for payroll and 1099 reporting for many, many years. But it's always nice to have the webinar because it kind of gets people thinking about year-end. What do I have to do? Planning for it. And frankly, although we close people's years like all year long and you know, we use these procedures frequently, our clients only do it once a year, and it's really hard to remember from one year to the next what exactly you're supposed to do. So with that, let me go ahead and get started. At this webinar today, what we're going to do is first talk about the 2019 year-end update that just came out. We're going to talk about when should you close, what are your best practices preparing for close. We're going to go through the year-end closing procedures then at that point by module to tell you module by module what you should be doing, including best practices for data maintenance and all of that. We're also then at the end going to do a few frequently asked questions that come up every year to kind of answer those and head those off at the pass. And then finally, we'll do a Q&A at the end. And like Drew said, here's what you can do. As you're going through this, you're welcome to pull up that chat window on your Teams meeting and ask any questions you want. And Todd Fremming and Amy Gangle are on the other end there, and they can respond. If you have specific things you want to ask me, you can hold those to the end, and towards the end of the webinar, when I put up the Q&A slide, you can type those questions in. Drew will read those questions out, and then I can respond, or Amy or Todd may respond as well. So happy to answer any questions you might have. Let's see, first of all, let's talk about the year-end update. So each year in the last week of November, which would have been last week, Microsoft releases a year-end update. The purpose of the year-end update is basically it's a service pack that's added onto each supported version of GP. The purpose of it is to get things updated for tax. You know, so for example, your 1099, last year the 1099 form changed. And so at the year-end update, the 1099 form was released as part of that hot fix or that service pack, so that we had to install it in order that when you printed your 1099s last January, the correct form printed out. So those the year-end updates for Syvantis Cloud customers, it's all free. We just install it. We just schedule it with you and install it. If you're an on-premise customer, we actually charge for that service, but it really is fairly quick and doesn't cost you very much. And we usually send an email in early December to schedule those updates, but I'm going to have a caveat with that this year. I'm going to hit on the next slide that I'll explain that to you, what's going to be in that update. Also, as Drew mentioned, at the end of this, we're going to send, after this webinar is complete, either tomorrow or Monday, we're going to send out year-end closing instructions, like in formal written form. It's several pages long that you can follow step by step, as well as copies of all of these slides and a couple of other things that'll help you with year-end close. So let's talk about the year-end update. This year, Congress really didn't do anything to taxes. So luckily, that makes it easy on all of us because we don't have to apply a whole bunch of year-end updates. This year, the 1099 form did not change, the W-2 form did not change, the W-3 form did not change, the FW-2 form, that's the electronic filing, did not change, and the ACA did not, ACA updates didn't, there were no ACA updates, which is kind of awesome because that means that, you know, none of us have to be scrambling, you know, right at the end of the year to go ahead and apply all those year-end updates. And actually, this is probably the first year in several years where we haven't had any changes, so it's kind of nice. There is one exception. If you are a payroll GP user that uses employee self-service, which for those of you who, you'll know if you're employee self-service because it's actually a separate license you have to pay for. And what it does is it allows, it's a self-service thing where you're able to, your employees are able to enter their W-4s online and have them automatically come into GP. If you are an ESS, your company uses ESS, employee self-service W-4 forms, there is a change on that form. So then we will need to update that. IRS released new W-4 forms this year. So then we will have to apply the year-end update to you. So what we're going to do is we are going to email ESS customers that we know of that are using ESS. We're going to email each of the people, the people are responsible for payroll, and schedule a year-end update for you But for everyone else, you won't need to worry about it because you're not going to have any updates. So we won't have to worry about year-end update. So, all right. So the next thing to talk about is when do we close? So, and what to do for entering your first transactions for 2020. So when's the best time to close GP? Answer, and I say this every single year, is as soon as possible after year end. Usually our clients will all be closed within 5 to 7 business days after the end of the fiscal year, which means this year, because the first happens on a Wednesday, between January 2nd and January 10th, they will fully have closed. And I should emphasize, not just partial close, but fully closed, even general ledger, and we'll have run all of the year-end closing procedures. I really recommend for all of you to really focus on getting this done by January 10th. Why? Well, a couple things. First of all, it makes the data much easier to manage in Dynamics GP for year end, but also because your reports all roll forward properly, and frankly, for your own personal psychological health, you're basically getting through year end as fast as possible. Yeah, it's a push, you put extra time in, you get it done. But when it's done, then you can move back to your regular roles and responsibilities and you're not distracted by year end anymore. So next question I always get is, can I enter transactions into 2020 before I close 2019? The answer is simply this. Yes, you can, but Microsoft doesn't recommend it and we do not recommend it. So, but you can, and I'll go into details as to what the consequences of entering transactions into 2020 before you close 2019 are in the next slide. But the recommended procedure by Microsoft is to enter all your transactions in 2020, keep entering them all, do all your sales orders, do all your invoicing, do all of your vendor invoices, but just put them into batches, but don't post the batches until you've completed your end closing procedures for 2019. And again, that's another reason why you want to close as soon as possible, because for those of you that have high transaction volume, you're going to be putting in so many transactions, you don't want those all hanging out in unposted batches for very long. So I also recommend that you go ahead and make sure all outstanding vendor invoices are entered in as of a 12/31 or earlier. Make sure everything is caught up before you close. The important thing to remember about payroll, payroll is very important. You can run payroll, but you cannot post it until after you close. Very important. That one is actually a requirement. So what happens if I don't close before posting in a new year? So in other words, I go into 2020 and I just start posting things and just keep doing my job as I always have. Is that a critical issue? In a nutshell, it's not. It's not critical, it's not that important, but it will make some reports more accurate if you wait, and it'll be a little less confusing. That being said, there are 3 primary things happen at year-end close. First of all, the vendor yearly summary inquiry, the customer summary inquiry, and the customer yearly summary, those particular query windows update at year-end close. So for example, if I go to the vendor card and I click the summary inquiry and I pop up and look and see what the vendor, how much I paid a vendor in a certain year, that resets to 0 for the year upon year-end close. So if I enter some transactions into 2020 that belong in 2019, if I pull that up, that summary inquiry is going to be inaccurate because I actually entered transactions before I closed and those went into those 2019 numbers. I also have a couple of inventory reports, the inventory turnover report and specifically, that are going to be inaccurate because again, inventory turnover resets at year end as well. That being said, I should be clear, it is actually very few GP customers rely on any of these inquiry screens at all, the summary inquiry screens. That was something we used many years ago, but today most people run reports for that anyway. So that being the case, if you go ahead and post into the new year without closing, you're still going to be okay. You're just going to have to understand a couple of those query windows aren't going to be accurate. Next question I have is, what if I'm not quick enough? What if I really want to be able to post, invoices into 2020, but I'm not done with everything yet? So we close GP modules in this order: inventory, then receivables, then payables, and fixed assets, and project accounting, then general ledger. So since I'm doing it in that order, if you think about it, like let's say I'm a distributor and I am going ahead and, first thing I'm going to do, on January 2nd is I'm going to make sure by January 2nd, all of my invoices out, all my POs, are completed, and all my invoices are out to my customers. Probably by the 2nd. I'm going to get that done as fast as I can, which means that inventory, receivables, and payables, are pretty clean usually within, a number of days within year end. So what you can do is you can actually close each module at a time and then go ahead and post transactions in. So for example, I could post all of my customer invoices, and at that point, basically inventory is done. And receivables will be done at that point, and I can go ahead and close inventory and receivable modules, start posting customer invoices just like normal, even though I haven't completed payables, fixed assets, or general ledger. So I can do one at a time and start posting those as I go. What if I have to complete an audit? That one, I get the question every year, and people just kind of choke on that one. They're like, oh, I'm probably going to have post-closing adjustments that are still going to come through. I got to hold it. I don't want to run closing for GL because what if I have an audit adjustment or this or that? And I have to remind people every year, you should always close the GL immediately. Do not wait until you're done with audit, or do not wait until you have your final, accruals done. Don't wait for any of that because it's not necessary in order to close the GL. And so I just want to remind everybody, go ahead and close it. GP works really well. It handles it very well. It takes any adjustment that hit the P&L and automatically closes it to retained earnings. So the way it works is, let's say it's January 10th, I close GL. January 15th, I realize, oh crap, I've got to accrue, I've got to accrue a travel expense. So I'm going to go ahead and accrue that. So I've got to debit my expense. I'm going to do an accrual adjustment, debit my expense, credit my accrued travel expense. Then what I do is when I enter that into GP, and I've already closed 2019, when I enter that as a 1231 adjustment, it's going to debit the expense, credit the accrued liability, and immediately, automatically, GP is going to go in, it's going to debit retained earnings and credit the expense. So it's going to roll it right through retained earnings just as it's supposed to do, and handle everything. My financials will be right, everything will work perfectly. As Drew said, I've been doing this for 20 years in GP, and I have done hundreds of year-end closes probably. I have never, ever had a problem with this feature. It works 100% of the time. I have to say 100% of the time, so please don't hold for an audit. All right, so what do I have to do? What are my best practices in preparing for close? Well, the first thing I got to do is order my 1099s and W-2s. Then I complete my balance sheet close for the month. Then I run my month-end routines. Then I run check links. Then I start the closing procedures. So let's go into each one of those in detail. First, I have to order my 1099s and W-2. The preferred provider of Dynamics forms is Deluxe Corporation, deluxe.com. You're welcome to email dennisbentine@syvantis.com for additional instructions. However, those of you that are on this webinar right now, you will be receiving an email from us that lists out, gives you some recommended forms to order from Deluxe, so that you kind of know which item numbers so you know which item numbers we recommend that you order. So you'll be getting that within the next couple of days, and so you'll be able to go ahead and order your 1099s and W-2s. You're also welcome to email support@syvantis.com, and they'll forward on it to Dennis for you. Next thing, I always want to remind people of this. Every month end, this should happen. So this December, if we're doing this right, December month end or December year end should be actually no more problem than any other month end. It should be no more work or effort, because if you do it right, you're doing a balance sheet close every single month end. And for those of you who, were auditors in a previous life, the concept of that you do a balance sheet close. If you close your balance sheet properly, then the P&L is kind of an afterthought. The income statement happens automatically. And I just want to remind you, those of you who maybe haven't been auditors in the past or aren't familiar with the concept of balance sheet close, essentially what you do is you go through every single asset and every single liability on your balance sheet every month end and provide documentation to support each one of those numbers. For example, the obvious ones are, you've got your bank rec. Well, the documentation to support that is your bank rec and your bank statements. Documentation to support, your AR balance in the GL is going to be accounts receivable, historical age trial balance. The concept is, if you look at assets equal liabilities plus prior year retained earnings plus current year income, if you think about it, if I can validate every single asset exactly, I can and validate that every one of those numbers is correct. If I can validate that every liability is correct, I know what my prior year retained earnings is because that's just a solid number that never changes. If I know all three of these numbers, I just got math at that point, that your current year net income has to be correct if the other three numbers are correct. So the income statement, when you're doing a month-end close and an annual close, is almost an afterthought. I mean, you may have to reclass among different revenue and expense accounts, but you know what that number is because you validate the assets, liabilities, and prior year retained earnings. One of the things that Drew's going to send you at the end of this webinar, along with the slides, et cetera, is a cheat sheet that shows the sample reports or which reports you should run each month end to support the balance sheet balances for month-end close. And you're always welcome to contact, a consultant at Syvantis or support at Syvantis.com, and they can steer you in the right directions or give you suggestions for specific balance sheet balances and how to support them. So that's the first step. This is a monthly process. You do that for December. The next step is you run the month-end routines. And those would include aging your accounts receivable, running paid transaction removal in the sales module, removing completed POs in the purchasing module, and running reconciles on each module. Those, again, should be done every single month end. And certain things, if you're very high volume, should be run more frequently than month end. For example, inventory module reconciles. If you're high volume, you got tens of thousands, hundreds of thousands of transactions running through a month, you should be running reconciles on inventory more than once a month, sometimes even weekly, to make sure that you keep the database clean as possible, and so that the allocations on your inventory are correct. If you have questions about removing completed POs and paid transaction removal, I'd encourage you to contact support at Syvantis.com, and one of our consultants will explain to you how those routines work and why it's so important to do those. Those should definitely be done every single month end. And if you're not doing it, please ask how to do it. It takes us 5 minutes to show you how, and then you'll have that done. Then the last thing you do before you run year end, and this is again just a good best practice, is to run check links on the entire system. So what check links does is it makes sure that the modules, that the data that's running through each of the modules of GP stay in sync. So for example, let's say you post a sales invoice. Okay, well, what happens? Well, when you post a sales invoice, it not only runs through sales order processing, it also runs through inventory, and it goes and impacts your inventory balances. It also goes ahead and hits your accounts receivable, and it hits your general ledger. What checklinks does is make sure those are all in sync with each other, each of those modules. Is it important to run checklinks on a monthly basis? No, not unless you're extremely high volume. Otherwise, checklinks, really, we run those when we see something's not right and something's not actually in sync. But also, as a best practice, we try to run it at year end just so that everything's in sync for year end. Not required, but it's a way for us to remember to run it periodically once a year. The important things to remember about checklinks is you have to have system level security to do it. All your users have to be logged out. If you're a large organization, checklinks can run up for a very, very long time, like dozens of hours. If you're an average size GP company, it might run for 2 or 3 hours. You just got to make sure you've got ample time. So we frequently run these on the weekends or overnight. To do it, you go to GP Maintenance Checklinks. If you wanted to run us 4 checklinks for you, we're happy to do that. And actually, if you're a cloud GP customer, that's included in your service and it's free. You just have to let us know, and make sure you let us know ahead of time, because at year end, our people are like crazy busy trying to get everything ready for all of our clients at year end at the same time. So we've got to have a couple days notice. So make sure you tell us a couple days ahead of time and put in a support request so that we can get you on the schedule to run that for you. And then the other thing to really important with checklinks is always back up your data completely before running checklinks. We really don't, to be honest with you, have problems with checklinks at all. It's just that it is a deep utility, and we want to make sure that if something were to go wrong, we could restore from backup. So let's talk about what we need to do next. We also will want to close our fiscal periods. Most of our clients do close their fiscal periods on a monthly basis. What you'll do is go into fiscal periods, administration company fiscal periods, and you'll mark off which modules you no longer want to enter into. So for the example I gave earlier on, where I had all my sales invoices, I got all those posted, I'm ready to run inventory as receivables and payables close. I would go ahead and mark off inventory, receivables, and payables modules so that those nobody can accidentally post back into 2019. And then I'll run my year-end closing procedures. Again, if you have any questions, support at syvantis.com. So now I've got all my preparation done. I got my balance sheet close done, my monthly balance sheet closed. I've run all my routines. I run my check links. I'm ready to go. So we close the modules in the following order. Payroll comes first. I have a parenthetical optional on that. Actually, payroll technically can be run anywhere in the process. Reality is everybody has always got a payroll fairly quick after year end. And so because of that, payroll is the first module pretty much anybody runs, right? Because they got to get you payroll year end closed before they can go ahead and start entering the next payroll into the system. So secondly, you run inventory, third is receivables, fourth is payables, then fixed assets, then analytical accounting, then project accounting, and then general ledger. And like I said, you can do one at a time, you can do 2 or 3 at a time, you don't have to do them all at the same time. Payroll is one of those that's usually run by itself, and we just do the payroll close by itself. What are my backup, or what are my best procedures, best practices for year-end closing? First of all, if you read Microsoft's documentation, they're going to tell you to run, I don't know, piles of backups during year-end close. Please, for 95% of GP companies, you don't need to do that. You actually, probably 90 to 95% of GP companies, except for the very largest that maybe have hundreds of thousands of transactions a month, you only need to run one backup. You run a backup, you run through all of the year-end closing procedures, and then you run a final backup. Another thing, and the reason for that is because year-end close in total typically only takes an hour or 2 max. So there's no point in running a bunch of backups in between, because you know if something went wrong on an hour and 45 minutes in, and you got to restore from backup and rerun close, you only lost an hour and 45 minutes of work. So there's no point in doing backups in between. If you're a very large company and you're doing a year-end close, you will want to do multiple backups between modules, but those only happen for those of our clients that maybe have hundreds of thousands of transactions a month, okay? The other best practice is make sure that after you do all this and you complete the close, that you just delete those extra backups that you made, because your IT people are going to appreciate that, because you're just filling up their servers, you're just filling up their drives. Also, you'll see there are a number of reports that pop up, particularly accounts receivable and accounts payable. A report pops up during those closing procedures and asks you if you want to print. Say no. Just cancel out of that report and don't run it. They're ridiculously long. Some of them, most of our clients, they're thousands or tens of thousands of pages long. They're the kinds of reports that were built when GP was in the 1990s, when, we didn't have good backups and servers, when the servers didn't have very much storage space, so it couldn't handle storing all of that data. It's not like that anymore. Those reports aren't necessary at all. And when I say at your peril, I mean you're just going to be sitting there forever watching them run, and certainly printing them is going to take you forever to print them when they're thousands or tens of thousands of pages long. So hit cancel on those. I also have one little trick. So in each one of the modules, as you're doing the year-end close, it's going to identify your system date, and it's going to put that up on the window for you for the next year. So for example, let's say I'm closing accounts receivable, and it's January 15th, and I run the closing utility, and my January 15th is my system date. The system is going to pick up that January 15th date, and after your close is done, and maybe the next year I go pull up that window and look at it, or later on I pull up that window, the year-end closing window, and look at it, it's going to say last date closed 1/15/2020. Well, for some people that's just confusing. Actually, it really only closed 12/31/2019, but it actually took my system date to say what was the last date closed. So it confuses people. So if you change your system date to 12/31/2019, then it never confuses people. So I recommend that. Okay, so now what we're going to do is we're going to go through each one of the modules and what needs to be done to close each module. And as I mentioned, payroll is the first one in the list. Why? Because payroll close has to be run after your last 2019 check run and before your 2020 check run. So it's important to get that done. So if you have a payroll that's got to go, let's see, this year a Friday is January 3rd. So if you got a payroll that's got to go out on January 3rd, what you're going to need to do is run your payroll close after your December payroll run and before your January 3rd run. If you have to do a year-end update, so if you're one of the companies that has the W-4 ESS feature, the online W-4s, you will need to do your year-end update after your last payroll of 2019 and before your first payroll of 2020. So we're going to want to make sure that we get that done. Again, we will reach out to you as well for those of you that are our clients and schedule that for you. Another important thing is run all your monthly and quarterly payroll reports before you close. It's not critical because you can reprint them, it just confuses people. And I have an FAQ at the end of this that talks about what happens if you don't run your quarterlies before you close, and so I'll explain that when we get to the end here. So inventory, a couple procedures that you should run. Of course, you're going to run your physical counts and complete that and do all your inventory adjustments. You also should do a reconcile of all inventory quantities before you close. Again, an important procedure. Inventory reconciles is a critical procedure in Dynamics GP. If you are even a small company, you should be running inventory reconciles at least monthly. If you're a large company with lots of transactions, you may need to be doing this weekly. Just want to warn you of that. Just want to remind everyone of that as a normal procedure. There's also, when you run inventory close, there's a pop-up window that pops up and it's got some checkbox on it. There's one checkbox you should check, and that is remove discontinued items. So let's talk about what happens with that. So let's say that, during the year, this is actually just something that keeps your database clean. So let's say during the year this year, let's say I have 10,000 inventory items. And during the year, I discontinued 1,000 of those items. So along the year, as we've been seeing that, that item is no longer going to be sold, our inventory control people have been going in and discontinuing those items, right? At the end of the year, let's say that they've discontinued 1,000 items. Let's say 900 of those items are no longer quantities in stock. Like I can't sell it because it's discontinued. I can't purchase it. We're never going to be touching those items again. If you mark the remove discontinued items box, what happens is as part of the close, the system is going to take those 900 items and pull them out of my inventory master records. What that means is when your people, your customer service reps or your salespeople are entering sales transactions, those items no longer pop up in the window as options to be able to select to sell, which is nice for them because they're not looking at a bunch of stuff that they can't sell anyway. It's keeping those items clean. What it doesn't do is remove that from the database. So what I mean by that is, yeah, you can't see it in the item master, but you can query on it. You can see it on all your sales transactions. You can see it on all your purchase orders, your purchase order receipts, all of those kinds of things, your intermatch transactions. They're still all there. It's just you can't select them to sell anymore. So definitely recommend doing that. Another important thing to understand, just a tip and trick for inventory is weirdest thing. So you click OK, you click remove discontinued items, you click OK to close inventory, and it just sits there for a moment. You can kind of see it spinning, and it's just done. You're like, did this finish or did it not finish? It finished. There's no report, nothing happens, it just stops. And it's done. It's confusing and it scares people, but that's the way it's supposed to be. Receivables. So the next thing you're going to do is close receivables. I do recommend running a reconcile on accounts receivable before you close. And again, all that reconcile on accounts receivable is going to do is recalculate the aging buckets. Sometimes something will get kind of not right in the database and it'll just recalculate it, make sure everything's in the right buckets. Perform paid transaction removal. Again, I mentioned that as a monthly routine that you should always be running. Paid transaction removal. Again, if you don't know what that is, you don't know how to run that, please reach out to us and we'll explain it. It takes like 2 minutes to teach you how to do it, but it's a really important utility to run in GP. And then the other thing is you're going to go ahead and just hit close. You're going to actually just, hit close on it. It's just going to run. It's going to pop up and ask you if you want to print the closing report. Just hit cancel. Don't do it. That one, even on our smallest clients, can be thousands of pages long. And so you're just going to watch that thing print forever and waste a lot of paper. So just cancel it. Don't worry about it. You can pull up that report and that date on that report anytime you want in GP because it's all maintained in history anyway. Payables closes next. Important, do not post any AP transactions until after close if you can avoid it. Again, because those vendor query screens will not be correct, not critical, but it is helpful for people not to do that. You can enter all your AP transactions. Your AP people can do their normal jobs. They just shouldn't post. They should save it in batches till after AP close. If you are a fiscal year company, you still have to do an AP close at 12/31. Why? Because it closes the tax year. So when AP close procedures pop up, you're going to have close the fiscal year and the tax year. If you are a calendar year-end company, you close both the fiscal year and the tax year at the same time. If you're a fiscal year-end company, you'll close only the tax year at year-end. And what that'll do is set you up to be able to print your 1099s. For those of you who aren't using 1099s in GP, you should be doing it. They work great. They've been working great for years. You can edit, you can do whatever you want. They print out great. Just go ahead and use it. When everything is done, you got your 1099s done and your AP and AR are done, then you'll go ahead and close the tax year. Okay. So the next one you'll do is fixed assets. This one, fixed asset close, is mandatory. I can't emphasize enough on this one because we have had a couple of situations where clients have entered fixed asset transactions and run depreciation into the new year, like into 2020, before 2019 is closed. And I'm telling you, it's almost impossible to go back and restore that thing. So it's just very difficult to do. So very important that before you enter any fixed asset transactions into the next year, that you perform fixed assets close. Another important thing to remember is you should close, as a matter of fact, you should close payables before you close fixed assets. Why? Because you frequently have payable transactions that would have hit fixed assets. So you got to get that closed and cleared out before you go ahead and close your fixed assets. Another important thing with fixed assets, Microsoft has released a number of new fixed asset reports in the past several years, but still, some of those reports are more difficult to print out after you've closed. So I do recommend just print out all of your fixed asset schedules, everything you got to give to your auditors, et cetera, before you perform the fixed assets close. Project accounting is the next module. Actually, project accounting, there are no specified year-end procedures for project accounting at all, but I like to put it in the list anyway, because project accounting, because it's so pervasive in GP. In other words, there's a project accounting module which impacts inventory module, impacts purchase order processing, impacts sales order processing, impacts accounts receivable, impacts general ledger. Since it's so pervasive, I recommend that each year end you just run certain utilities to make sure everything's clean in there. I would definitely run project accounting reconciles. That's each one of the procedures for PA reconcile. And that actually, you should do it at year end, but you should actually run it every month end. And you will need to run it multiple times until there are no errors if you haven't been keeping up with it. Another best practice on that is to go ahead and run project accounting check links before you close, just like I mentioned, but project accounting check links is a separate check links utility from the rest of check links. I do recommend running that until it's clear as well. Again, if you are a cloud customer for GP with project accounting, if you reach out to us, support@syvantis.com, give us a couple days notice, we will run the project accounting check links for you, okay? And the last but not least, I've got to do my GL close. So the most important thing to remember about GL close is to review your account list to verify posting type. Every year for 20 years, I've had at least a couple customers call kind of panicky because their year-end close, they closed retained earnings improperly. Good news is we can fix it fairly easily these days, but I just want you to know that it'll take a little stress off of you. So when you set up a new account in GP, a new general ledger account, there's some mandatory fields. One of the mandatory fields is posting type, and you have to select whether it's an income statement account or a balance sheet account. Okay, so if it does happen frequently, somebody will accidentally select the wrong one when they set up the account. So let's say I have an accrued liability account, and somebody accidentally, when they set up that account, they actually tag it as an income statement account. If they do that, then what happens is during year-end close, the system uses those that are tagged as income statement accounts as what closes to retained earnings. So what happens is if I have that balance sheet account, I've accidentally tagged as an income statement account. When year-end close runs, it's actually going to take that accrued liability account and close it to retained earnings. We absolutely don't want that, right? Because now our financial statements, retained earnings is wrong, but actually our balance sheet is wrong. We can fix it, and I'll bring that up in FAQs later. You actually can reverse the close, fix it, and redo it, which is great. But it's best to go ahead and print out that account list. You know, pull up a smart list, look at the account list, check and make sure that all P&L accounts are P&L, all balance sheet are balance sheet. Oh, and FYI, for those of you who don't know that, if you have a unit account, those are always balance sheet accounts. That should say is balance sheet. So when you go on through that list, make sure it's all correct, fix all of it, make sure all P&L accounts are income statement, all balance sheet accounts are balance sheet. And when you run close, all the P&L accounts will close to retained earnings properly for you. The balance sheet accounts will roll forward. Management reporter reports and year-to-date balances in GL will also roll forward to the new year. I want to remind you again, do not hold GL close. Do it immediately as soon as you have closed your sales order processing, purchase order processing, inventory control, fixed assets. Go and do it immediately. Why? Because when your accounting people are pulling up and querying the balance, for example, in the cash account, let's say, you know, they need to compare their cash account balance, of course, on the subsidiary or on the general ledger to the subsidiary ledger, right? They should be doing that like, you know, daily as opposed to deposits. Okay, well, that balance sheet account is not going to be correct until you run year-end close. So people are going to have difficulty reconciling those accounts. Also, management reporter reports, the default ones that you use, that won't be correct because you'll only have changes in balances showing up on that account or on that balance sheet. So unless you modify the management reports to accommodate the fact that you haven't performed year-end close yet. So can't emphasize enough, close it, get it done, understand that there's no risk whatsoever, that everything's going to work out great. You can still post back to the prior year. And when you're all done, one last thing that I do recommend doing is running SQL database maintenance after every year end. So it's a database routine that you can run. It's something that's just helpful to make sure everything is clean in the database. And it's not like you have to do it at year end, but it's kind of a good reminder every year end if you just do it at the same time every year. And lastly, you'll want a permanent backup and to store it in a secure location. If you're cloud, that's not such an issue because we have, you know, 45 days of backup. But if you're on premise, that's a different story, and you should probably do that. So let's go through some frequently asked questions real briefly here, and then we'll open up for additional questions. We'll have a little bit of time at the end. So there are a few things that come up every year that we get calls on. So let's say you're going ahead and doing your 1099s in January. And I go and print them all out, and I'm looking at this vendor, and I know I paid them $10,000 in 2020. And the 1099 should be $10,000, but it only says $9,000. I'm like, what the heck happened? Why is this wrong? Frequently, the most common reason that that's incorrect is because the following situation happened. So that might have been a new vendor in 2020 or 2019. I'm sorry, a new vendor in 2019. You know, your AP person went ahead and set up a new vendor. They did not designate it as a 1099 vendor. You wrote a couple checks, $500 each, you wrote $1,000 of checks out. Then all of a sudden, the AP person's looking at it, is like, oh crap, that one should have been a 1099 vendor. Oh, better put that in there quick. So they put in the 1099, mark it a 1099 vendor, put in the tax ID, et cetera. It's all set and ready to go. They're like, good, I got that done. Then they do $9,000 more payments in the remaining of the year. What happens when you run the 1099s is only $9,000 of payments are going to show up on that 1099 because the first $1,000 of payments during that time, the vendor was not a 1099 vendor. So you'll have to go in, and it's easy to manually adjust the 1099s in GP. You'll go into GP, you'll go ahead and manually adjust the 1099, and you'll be fine. I do encourage you to not just print out your 1099s, but instead to look at them, review them, confirm the balances to make sure that somebody didn't make a mistake and that they're all correct. And understand that you can definitely manually adjust. And also keep in mind, this can be a handy feature too as well, because sometimes you will have someone who may be a 1099 vendor for part of the year and not another part of the year. For example, we all know that S corporations, any corporation, you don't have to have 1099s for, right? So corporations don't require 1099s, and they actually, if you're incorporated, you actually don't require you know, any sort of requirement for even tracking them at all in the system. So let's say you have a vendor that's maybe limited liability company for the first half of the year, and then they switch over and become an S Corp in the next part of the year. That does happen, or they get acquired or whatever. So for the first half of the year, you will generate a 1099, then you can unmark the box and then not generate a 1099 for the remainder of the year while they're a corporation. Okay, so this one comes out frequently too. All of a sudden, I got to issue a check. It's January 2nd, but I haven't closed AP yet. Go ahead, print the check. Go ahead and do everything that you normally do. Just when you get to the point where it says post checks, just don't post it. Just leave it sitting in a batch. And then when you're done with AP close, go ahead and post it. This one concerns people in payroll. So I ran year-end close in payroll, and then I went to print my 941. And it's all zeros, like, oh crap, what happened? Do I have to manually generate my 941? No, it's kind of a trick. So when you print the 941, the system figures out or determines which year you're printing for based upon your system date. So if I go ahead and run year-end close, and my system date is January 20th, and I'm trying to print out my 941, it's January 20th, 2020. It'll look at January 20th and 2020 and go, oh, they're in first quarter 2020. Let's print out my 941 for this year. And so it's going to come up with all zeros because there's nothing in there that's a 2019 year, but in 2020 first quarter. It's a crazy thing. So all you got to do is, the trick is go into your system date and change it to 12/31/2019, and it's going to run just perfectly for you. All right, next one. I try to close the GL, I get an error message. And that, again, this message happens probably 30 to 50% of the time during close. So you likely will find this error. Message is going to pop up. It says a single use batch or a quick journal has not been posted. And then I'll say, do you want to continue with the close anyway? So first of all, I would recommend not continuing with close. It will allow you to, but it's not a good practice to do so. What it's telling, the system is telling you is, whoops, I'm a little concerned because you have a transaction out there that's dated 2019 and you're trying to close the GL for 2019 and how could you, the system is trying to give you a warning saying, why would you want to close 2019 when you have transactions sitting out there that are dated 2019? They've got to get posted before you close. So what you should do as a best practice is go back through all of your transactions, sales invoices that aren't going to be posted in 2019, receiving transactions that won't be posted in 2019, AP transactions, AR transactions, GL transactions, anything that you have with a 2019 date that you know you're not going to post into 2019, that they are going to be 2020 transactions. Go in, change the date to 2020 so that it's not trying to, it doesn't think it has to go to 2019. Then once you do all that, if you rerun this, then that message will no longer occur. So just a good practice. Does everyone need to be out of GP when I close? Yes, we recommend you perform year-end closing procedure when everyone is out of the system. We frequently recommend doing it on Saturday morning is a really good time to do it, or first thing in the morning during the week before anyone is in the office. Do it very early. Do it then because you're going to have a full backup the night before. Particularly if you're cloud, you're for sure going to have a full backup the night before, so you don't have to worry about backups. You can just walk in and go ahead and no one's in the system and get it done. I close the year. Is there a way to undo it? Here's one. I remember when I talked about previously about how you should always check your posting type when you're, print out the report and check your posting type. Make sure that every balance sheet account is posting type balance sheet. Every P&L account is posting type income statement, right? So let's say you make a mistake and one of those is wrong. Luckily, after GP 2013 R2 and later versions, you can go to the year-end closing routine window and you can actually click a button to reverse the historical year, and it's going to go ahead and reopen it back up. You can make any changes you need to do and it'll close it back up again. So that's really a nice feature. Can Syvantis help me with close? Okay, I would say the majority, for sure, a majority of our clients help us. We do year-end close with them. Here's the thing. We're going to send you a document that's like, I don't even know how long it is, 10, 20 pages long. And it's going to say, do this, do that, do this, do that. It's just really long. And the reason it's so long is because we've got to, we adopted what Microsoft publishes. We've reduced it quite a bit, but it's still really long because we have to get every possible scenario for every potential client listed in there. So it's really long and a lot to go through. And, if you do it yourself, you only do it once a year, you got to follow every single step. For our consultants, we do it all year long because we have fiscal year companies. We do a lot of them. We can usually do a remote session with you and help you close the entire year, like for the majority of the clients, in like an hour, sometimes a couple hours. And so it's going to save you so much time and anxiety that most people just have us do it with them. So if you want to do that, email support@syvantis.com, schedule a time. Can't emphasize enough, year-end, we're like crazy busy because everyone else is reaching out to us as well. Make sure you give us a couple days ahead of time and we will help you do the close. That's it. Good. I've got about 10 minutes to spare. So I'd like to open up for questions now. And I think if you have any questions, you can go ahead. If you haven't already been doing it, put it in the chat window. And Drew is monitoring that right now, and I'll open that up for Drew to go ahead and read any questions that might be outstanding. And I think we might have Todd and Amy also here that are going to open up and can answer questions from their side as well.
Yep, thanks, Janelle. So it looks like we currently don't have any questions. If you're having trouble finding the chat window, all you need to do is click into the Teams window and you'll see a gray bar at the bottom. There is a chat box icon, and if you hover over it, it says open conversation, and that will open up the meeting chat window for you to type in a message.
Yeah, and you can also remember, I mean, we're available to help you guys anytime. I mean, and so you're welcome to go ahead and email us directly, email me directly, email Drew directly, because you have our email addresses. To email your consultants directly or support@syvantis.com. If you have something that you just need a little bit of assistance with, we can usually answer those pretty quickly. See anything coming through, Drew?
Oh, looks like we just got one here. This question is, for fiscal year end users closing the tax year for AP, does everyone need to be out of the system as well?
You know, not technically. That's a good question. Not technically, but you should just do it. I mean, really, and you're closing the tax year. Really, here's the best recommendation I have. Assuming your cloud, we know for sure you have backups the night before, and if you're on-prem, make sure you ask your IT people and make sure you get a backup. But assuming you have a backup the night before, go in early in the morning before everybody else is in and just go ahead and run tax year and close. And actually it runs pretty fast, so you don't need much time. Just keep everybody out, run it, and then you'll be safe.